Welcome everyone to Vested Interest. This is Shane, and on this video we will cover the weekly portfolio update. We do these every Sunday morning. We did add $1,546 to the portfolio, so we will cover what we bought. We will also cover any options we were in and any dividends paid out on the week. But before we get in the video, for those of you who may be stopping by for the first time, on this channel we focus on dividend growth investing. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend, and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the portfolio every week, and I cover that portfolio update every Sunday morning. But I also do larger purchases if I have extra funds from a bonus or a side job or something like that. I cover all my investments into the portfolio. I do not have a paid Patreon account. There's nothing to pay for. I don't intend to have a paid Patreon account. I'm not sending you to any other sites where you have to enter in any personal information. It is free to see what I am doing in my portfolio. We all have plenty to pay for. But if you would like to help out the channel, if you could do me a favor before we get too far in the video, make sure you hit that thumbs up button if you are a dividend growth investor, if you find any value in the content. Subscribe to the channel. Hit that subscribe button down below. Join us on this journey to financial freedom. Join the Vested Interest community. Hit the notification bell so you're notified whenever we put out any new content. Again, we do these portfolio updates every Sunday morning. We also do a stock pick of the day series Monday through Thursday whenever the market is open, and we look at a stock that's pulled back on the day to see if there's any value in the content. And drop a comment down below. Let me know what you think of the video. Let me know what's going on in your portfolio. What are you buying? Are you selling anything? A lot of selling going on the last couple of weeks. Pretty big drops. Did you pick up anything on sale? What dividends were you paid? And are you running any options? Would love to hear from you in the comment section down below. Go ahead and ask any questions you might have about my portfolio as well. And let me know if we have any positions in common. With that said, let's get back into the video here. And before we go, I really do appreciate all the subscribers out there. The channel continues to grow because of people like you. Now back into the video. We did have one options play this week that hit. It was a covered call on CVS, ticker CVS, out of the healthcare sector. And as you can see, we opened that on August 5th, which was Monday. One covered call. That negative one is one contract. One contract is 100 shares. So you have to have 100 shares or more to run a covered call. And we had an August 9th end date for this with a strike price of $64. So that was Friday. We received 53 cents per share. They take out some fees here. Total, we received $52.45 in options premium. And this did expire on August 9th, which was Friday, out of the money. So we keep these shares, we keep this options premium, and this options premium really goes right back into the portfolio, and I use it as part of my investment. So what you saw on the first page there, that 1,500 plus, part of that was this $52.45 in options premium. So that's the only one that hits, not the only one we threw out there. It's just happened to be the only one that hit. And I was surprised actually, because 64 was way out of the money. So I was actually surprised this one hit for a pretty nice options premium here. No dividends this week. We do have quite a few that are hitting next week. Next week will be a lot of dividends hit, especially on the 15th. I think the majority of them coming on the 15th. Now, the first new capital added, we did most of our buying on Monday. Big drop on Monday, and we took advantage of that drop. We added $1,336.94. With those funds, we picked up actually 8 shares of Valet. I don't know why they split it up here, but there's 7 plus 1 here, so 8 shares total. Same cost per share, $9.76. Again, I don't know why they split it up like that, but 8 shares of Valet, ticker VALE, out of the material sector. This is a mining company. There are some tax implications because this is a Brazilian company. My brokerage account takes the taxes out whenever dividends are paid out. Make sure you understand what your brokerage account does. If they don't, you will be responsible for the taxes come tax time. Now, we usually buy this Vanguard Total Stock Market, ticker VTI, on Friday. But again, big drop on Monday, so we took advantage and we picked up. This is our weekly buy. We're going to be buying VTI weekly, whether the market's up or whether the market's down. Again, took advantage of that dip on Monday, picked up 1 share at $254.18. And our other ETF, part of our other weekly buy, same thing, big drop on Monday. So we took advantage of that drop and picked up our Schwab Strategic Dividend Growth ETF, ticker SCHD, at $78.93 for the 1 share we picked up there. There's that other Valet as part of the 8 shares. Comcast, continue to add to this one. This is part of our weekly or part of our monthly buys here for the month of August. So we'll probably nibble on this every week, most likely. 6 more shares to our Comcast Corporation position, ticker CMCSA. This is out of the communications sector, $38.89 per share for those 6 shares. BABA dropped back down below our cost basis, so we took advantage of that as well. Picked up 2 more shares of our Alibaba Group, ticker BABA. This is out of the consumer discretionary sector. This is a Chinese company, so same thing, similar to Valet. My brokerage account takes out the taxes whenever they pay dividends. You make sure you understand what your brokerage does. 2 more shares at $74.90 per share. 2 more to our Starbucks Corporation position, ticker SBUX. We've been building this one out for a couple months now. Probably going to continue to build it out a little bit as long as it's under our cost basis. Picked up those 2 shares of SBUX in the consumer discretionary sector at $73.69. Now, if you remember last week, we ran an options play on Kraft Heinz. It was called away. So I know it looks like we picked up 108 shares, but this is not correct. So it's really the 100 shares that we lost last week, plus we picked up 8 more shares. And really, the options premium that we saw on the first page, that went to buying, adding the additional capital we needed. Again, if you remember, we received $3,500 in options premium last week. Picking up, it was a little over $35 per share, so $35.59 is what we picked them up at. We probably could have been a little bit patient. It did drop under the $35 mark throughout the week, but we just went ahead and picked them back up. And I actually tried to run another options play on these after I bought the 100 shares, but it didn't hit. So 108 shares, but of that 108 shares, only 8 are really new shares. 100 just picks back up the shares we lost last week. And Kraft Heinz is out of the consumer staples sector. 4 more shares to our Enterprise Product Partners position, ticker EPD. We picked up those 4 shares out of the energy sector at $27.64 per share. This is another one, as well as Kraft Heinz and Starbucks, that are all on, and Comcast, that are all on our stocks to buy in August. So you'll probably see these pretty routinely throughout the week, or throughout the month, I mean. And we did add this $1,336.94, added $51.70 in additional passive income over the next calendar year from the positions added. And we only counted 8 shares, not the 108 total, but just 8 shares included in this below. Now, we weren't quite done. We did add a little bit more, $209.25 on August 8th. We picked up 1 more share of Medical Properties Trust, ticker MPW. And this is a REIT out of the real estate sector. Picked up that 1 share at $4.70. Valet, we picked up a few more Valet. See, we were getting it below $10 earlier in the week. We picked up a few more at $10.20 per share. This is that mining company. And 3 more shares to our CVS Health Corporation position, ticker CVS. This one just cannot seem to find its footing, but we're going to continue to nibble on it. $57.98 per share, and CVS is out of the healthcare sector. The $209.25, the new shares added an additional $11.84 in passive income. And this is really that dividend snowball in effect whenever people talk about that, right? I'm adding more shares, which will, whenever these dividends pay out, will pay out more in dividends. Those dividends will go right back in and buy more shares, and that dividend will continue to grow over time, right? Total passive, or total invested, $1,546.19. Total passive income added $63.54 this week. Really like to see that continue to grow. Not quite to $1,000 a month, but we are getting very, very close. Quick run through the sector weights. Communications makes up 10.05% of the portfolio. Consumer discretionary sitting at 7.76. Consumer staples at 9.79. Energy 6.1. Financials at 5.65. Healthcare, largest slice of the pie here at 14.12. Industrial 6.05. Probably going to be adding to some industrials here. Owens Corning has pulled back. I was up 90%. Now I'm up only about 60%. I regretted not adding to it last time it pulled back to, had a 30% drop. So I'll probably nibble on that. Might even add a little bit of Union Pacific as well, but definitely going to be adding to our Owens Corning position right now. Technology is 6.45%, materials 8.5%, utilities at 9.88%, REITs and real estate sitting at 11.5%, and ETF still the smallest slice, though it is starting to get bigger, 4.16%. Might overtake financials here over the next quarter or two. Over to the right, you can see the portfolio sector weights broken down by the percentages that match the pie, as well as the dollar amount allocated to each sector as well. Now, I show this every week, and I think it is important for people out there to see a real portfolio built out over time. The ups and downs of the market, the ups and downs of holding individual positions, as well as the few couple ETFs that I have, VTI and SCHD. They go up, they go down over time. That is perfectly normal. Sometimes you're going to see red, sometimes you're going to see green. That's perfectly normal as well. Not every position is going to be a home run. Some positions are going to do better than others, and some positions are going to do better than others at different times. That is part of the market, right? Whenever I see red, if they're still good companies, if they still meet the criteria that I set up whenever I bought them, if nothing has changed with the fundamentals of the companies, I look at those times I see red as buying opportunities. Comcast, I'm still buying it. It's in the red. If I was comfortable buying it at $41.20 per share, I should be ecstatic buying it at $39.08 per share. Same thing with Cisco, CBS, KHC. Now, again, these aren't the only ones I'm going to be adding to. Owens Corning, like I said, I'm actually up 69.51%, only almost 70%. Why would I add to that? Well, I was up just a couple weeks ago 95, 98%. So it's pulled back significantly. And my cost basis is so low at $92.64, I can add to it all the way up to $126.44. So I could bring up this cost basis and still be below where it sits at 15% of a 52-week low and be able to add to this position, maybe even get it to 50, 60 shares before I really want to pull back again. And while it's pulled back, I know that it's strange to say, I'm up 69% and it's pulled back. But since it was 95, 98% a couple weeks ago, that is a big pullback, right? That's over 20% pullback. So I want to take advantage while it's pulled back, and I want to add to the position, right? So I'll probably be adding to Owens Corning next week as long as it doesn't shoot way back up or something. But as you can see here are all the different positions in the portfolio, total shares I own of each, current price as of the close of business on Friday, market value as of the close of business on Friday, my average cost per share, my purchase price, how much I have into each position. This does include dividends. Total return, whether I'm up or down, I'm going to show it. I want you to see a real portfolio built out over time. Percent return right here, if it's in the green, obviously that means I'm up. If it's in the red, that means I'm down. What sector each position falls in, whether it's a quarterly, monthly, semi-annual payer. As you can see here, this highlighted in yellow, that just means that the companies that are highlighted already have raised their dividend for the year. Total current dividend yield as of the close of business on Friday, my yield on cost, portfolio weighting, what you saw the previous slide was each sector weight. This is each individual's weighting, right? And I have a rule in my portfolio. I don't want any one position to be more than 10 to 15% of the portfolio, really 10%. And I don't want any one sector to be over 20 to 25% of the portfolio. Estimated annual income in this column, payout months in this column, dividend growth year over year, and where it sits at 15% of a 52-week low. Let me talk about this a little bit. Using Owens Corning again as an example. Again, I use this as kind of the high water mark. I want my cost basis, right, my average cost per share, to be under where it sits at 15% of a 52-week low. In this case, $126.44, $126.44. My cost basis is only $92.64. So even though it is selling right now at 157, and that is above 126.44, if I was to buy, it would not bring my cost basis, my average cost per share, up above that, right? So I can add to this position, even though it's above, the current price is above the 15% of a 52-week low, because my average cost per share is so low, and I'm not in jeopardy of bringing that up. Or I'll stop bringing it up before I get to 15% of a 52-week low. It's just a high water mark where I want to keep my cost basis below. And this changes over time, right? As the 52-week low increases, this will increase as well. So total shares, 6,579.999 shares. $279,396.57 is what the portfolio is currently worth. I have $261,973.09 into the portfolio. Total return, $17,423.48. I don't really focus on this. Percent return up 6.65%. Again, I don't really focus on this. Current yield, 4.27%. My yield on cost a little higher at 4.554%. And this, the reason it is circled in red, this is what I focus on. The annual income paid out from the dividends, all the companies in the portfolio, goes up, continues to grow as I add new capital, as the positions in the portfolio pay out dividends, as they raise their dividends. It continues to grow week over week, month over month, quarter over quarter. Currently sits at $11,929, no pennies. Very, very close to $12,000 or $1,000 a month here. I think very close next week. Hopefully with all the positions that are going to be paying out dividends, we hit, and the funds that I add, we will hit it. But if not next week, it'll definitely be the following, and I'm really looking forward to that milestone of over $1,000 a month in dividends. And again, very, very close. And then once we hit that milestone, we'll be on to $2,000 a month in dividends. And then lastly here, before we wrap this one up, dividend growth year over year sitting at 6.06%. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you think of the video. What are you adding to your portfolio? How did you do this week? Did you end the week in the green? I know we probably all started out. There was not much of anything that was in the green to start out the week. So I know we all started out in the red to begin the week. But how did you end the week? And what did you add? Did you take advantage of the dip on Monday? Did you add to any positions? Or did you sell out of any positions? Let me know in the comment section down below. Would love to hear from you. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we'll see you in the next one. I'm not a financial advisor. Nothing in your presentation should be considered financial advice. I'm lawyer sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't just money. You should never invest any amount. Now, confidentially, always do your own research, invest business research, situations, circumstances, and select criteria, or seek the advice to counsel of a certified financial advisor.